Hi guys, welcome to Blockchain Champions. This is Olympic Charts coming to you from my new house. You can hear and see the quality might be a bit different. That's because my computer setup has not been, I've not finished it up yet. I haven't been able to move everything, so I'm here on my laptop. I really wanted to make this video for you guys because it's been quite a while and yeah, according to some, a lot has happened. According to me, not much has happened at all. We're just completely range bound. Before there was a lot of talk on the first time ever that Bitcoin went down for 9 weeks straight, which we can see here. And we've actually set the low of this move in the 7th week. And the lows of the 7th week, well, we haven't reached them even closely in the down week 8 and 9 of this move down. You would suspect that there will be some sort of relief rally coming in at some point. Uh, but so far, yeah, so far it's not looking like it. Um, there's been only weakness to me ever since the high of 69k. Uh, yeah, like over half a year ago now. Yes, we had one small higher high here after this move here, only to break down in this 9 week downtrend. So this relief rally we got in here has after that actually destroyed everybody and everyone still sitting in longs. Um, yeah, just completely ruined people. So um, today I really want to keep it simple because I don't have much tools and much agility on my laptop. So I just wanted to discuss the local range which we are in, and that's, yeah, you can either draw out something like this, or you can draw on this fixed range volume profile. I will start with this. I mean, if you look at this channel, it's been like really easy trading. We come in the channel, we form it, and after this, we've had one long, another long, a short, perhaps a long here when we didn't grind down from the middle of the channel, and another short here. So you've had quite a lot of trades, and as I always say, buy low, sell high. So the next time we reach the bottom, perhaps there's a chance for a long. The next time we reach the top of the channel, perhaps there's a chance for a short. Of course, now I've said this, we might actually trade just down and go fucking all the way down, but then it would have been easy. You've had the chance to take the short either here or here. Um, Taking profit here from this short here would be fine. Then you still would not have had your high taken, so you could still be in the short riding all the way lower, or you could have opened it at the retest of this channel only to ride it down lower. If you reach this level, you can take a hedge long because we are at the lows. And if you've come down lower below this level, you just close your short and you have you close your long and you have the short running up from higher, giving you a very good position. At least that's how I would trade it. Easy going. Now, for this video, I wanted to talk to you because I got a lot of questions for it about value area. And I will zoom in just a bit to the 4 hours to discuss the value area. What is the value area? Well, in fixed ranges, which this is, because I draw a fixed range from this to this, from the moment we entered this channel to where we are now, my settings are 70-70. 70 row size, 70 value area volume. And this actually, between these two blue lines, is the value area. The red line is the point of control. This is the point where the most volume has been traded in this range at this price level. So most trades actually happen around $29,750. This is the highest volume. Above this we call the value area high, and below we call the value area low. And these three lines are often very significant support or resistance while trading, and you can actually see it. Of course, this range evolves with new price action, but still very often it's quite indicative of what things are happening. So now you know value area high, value area point of control, value area low. I would always suggest everybody to use this because it's a very indicative setting and you know where the most trades are. And for some reason, just like VWAP, price always tends to trade to the point of control of specific ranges, especially when we are range bound. Now, to make even more clear how relatively easy this trading was, I will put on some higher time frame levels. I will stay zoomed in because else the chart gets so cluttered. Um, and what you can see here is what people call Barting, from Bart Simpson's head. People who actually claim that and who believe that, they are idiots. No offense. Well, at least slight idiots. I mean, price always moves for a reason. Price never moves randomly. Yes, it might seem random. Yes, we might view it as random, but that's only because we lack the knowledge. If you go back in time, you will always see that specific levels get hit uh, when making these kind of price actions. And the only thing that this price action is more volatility inside the range we've already known is there. Instead of it taking 2 or 3 days to get up and down, it just takes 1 or 2 or even less. I mean, for a day trader, this is heaven. For a swing trader, this is hard, or at least harder. I mean, I would expect uh, I would expect because we see lower lows, lower highs, I would expect at some point lower. But on the other hand, I think chances are really acceptable, or the chances are that we will never reach these lows that everybody is crying for, like the break of the 25k, reaching the 23k or the 19k. Why do I think that? That's because everybody is calling for these lows. The market is very bearish, and the more bearish the market is, the more bullish I become. So would I be surprised to see these levels? No, I would actually like it, because if we reach these levels, I will go in long significantly. But in my plan, I suspect that somewhere in this range here, which we are currently at, or let us expand it to the 25k, somewhere between the 32k and the 25k is actually where at this point I would expect the market bottom for now to be. I would love to see lower to take along there, but if everybody's waiting for it, we might actually go much lower or we not reach it at all, and that will be maximum pain. So if we somewhere form a specific or a bottoming pattern, as like we swing for a pattern, a relatively long held low, or we see volume increasing when we finally break some levels, that would indicate me that we finally have actually reversed trend, or started to form a trend. Because sideways, well, it's also a trend, but usually we call trends higher or lower trends. And so far, it's just weeks and weeks and weeks of sideways. And within the last week, a bit more volatility. Nothing to be scared about. And on the good side, if you're dollar cost averaging and we never reach lower, you've had a lot of time to accumulate all the coins, or at least Bitcoin, which you wanted at a very reasonable price. And if we go lower, well, you've bought some here and you will buy lower, lowering your average buy-in price even more, which will set you up for greatness to come when the time comes and Bitcoin flips bullish again. So there's a lot of positive sides to be said, and there's also a lot of negative sides to be had. But the negatives are for people who don't know how to trade this market. And people who do not know how to trade this market, they buy high and they sell low. When this channel gets broken to the upside, they think, oh, we have changed the trend, we should buy now. And that's what happens. Retail buys because of FOMO and they get stopped out. And when price gets low, people get feared and they are like, I have to sell my positions and my spot right now because we're going much lower and I want to buy in lower, only to get wrecked by going back up here and repeating the cycle over and over and over and over. Please don't be that guy. For now, there's one more very interesting thing I want to show you here. I don't often use the RSI, but for this indicative point I will. Why don't I use RSI? Because it's used by too many traders, and the more it gets used, the less powerful it becomes, because the majority is usually wrong. What you see here and here is clearly bearish divergence. Here we have a high price and a lower high. So the arrow is pointed this way. and the RSI is low here and higher here. And this is a clear example of bearish RSI on the daily channel. And bearish RSI can remain for a long time before playing out, but usually it plays out. And yeah, considering it was the first fake out to the top, considering we've bounced against this weekly level, which was from July or March 2021, somewhere there, considering we had bearish RSI on the daily, considering the volume was very low, considering we have not had a very significant fake out to the downside or anything fishy going on or anything eye-catching, to me, taking a short here at the 32K was actually quite easy. It was. If you have the information, it was a very easy short. So, to summarize, I think the chances are at this point of going lower, at least below this range, are higher than to break out to the upside first. I have planned for both situations, and I will trade or put my positions like that accordingly. I hope that when I'm fully installed in my new house, that I can make some videos again 2 or 3 or maybe even 4 times a week. That will take another week or 2, perhaps, in the worst case scenario. But from then I really want to pick it up again and educate myself more and educate you people more on how to look at this market from a trader's perspective. All right, that's it for today. If you like this video, please like and subscribe, and say hi to us into the Discord. Because the group is still small, I try to respond to all the questions I've got. All right, see you around.